You are listening to The Vocal Technologist. Spoken Tech for your ears.
Okay, let's try and unpack this. What a week in the crypto world. Seriously, from new all-time highs to some really fascinating tech shifts, it's just been a whirlwind.
It really has.
So our job today really is to cut through all that noise and highlight what really matters from the sources we've looked at.
Yeah, and what's fascinating here, I think, is how quickly the narratives can shift. These sources give us a pretty clear snapshot of, well, both the institutional momentum and the tech innovations underneath it all. We'll try and connect those dots for you.
Absolutely. So kicking things off in the market, Bitcoin. Wow. It certainly had a moment, right?
It did.
Extended that summer rally, hit a new all-time high,
Yep.
$124,480.
Incredible numbers.
And it seems like that was mostly fueled by corporate adoption. Seeing like 165 public companies getting into these Bitcoin treasury strategies.
Yeah, that's significant buy-in.
Plus supportive policies, right? Like that executive order potentially opening up the huge U.S. retirement market to crypto investment. That's going to be a massive vote of confidence.
Oh, definitely. That bullish feeling where, well, you could feel it. But here's where policy kind of throws a wrench in the works, or at least adds nuance.
Okay.
So Treasury Secretary Scott Bessent came out and clarified something important. The U.S. government will not be buying more Bitcoin for its strategic reserve.
Okay. So no active buying.
Right. They'll just hold on to seized assets, which is still a lot, $15, $20 billion, maybe at around 198,000 BTC currently.
Still substantial.
Very. And they'll add future confiscations. But that clarification, combined with some inflation data, actually knocked Bitcoin back a bit, over 4% from around 121K down to 118K.
So it just shows, even with all the institutional excitement, government policy still really, really matters for sentiment.
Precisely. It shows how sensitive the market still is to those signals.
Okay, so while Bitcoin had that policy wobble, Ethereum.
Well, Ethereum's been on an absolute tear. Yeah, different story there.
U.S. spot Ethereum ETFs saw just massive inflows, like $729 million on Wednesday alone, the second biggest day ever.
And $1 billion on Monday.
$1 billion.
Right.
Push ETH up to $4,743, like just shy of its all-time high. And you've got Standard Chartered talking $7,500 by year end. That's strong confidence.
Definitely signals strength.
Yeah.
And moving, from market moves to the actual tech innovation. It's clear the future of digital money is being built out, like right now, fast.
And Gemini Wallet seems like a really good example. A big step for, getting more people involved, mainstream adoption.
How so? What's special about it?
Well, it's this hybrid self-custody thing. So it acts like an embedded wallet within dApps, but also one you can take with you. But the real game changer, I think, passkeys.
Getting rid of seed phrases.
Exactly. Finally, no more writing down those crazy long codes. That just makes it so much simpler. Plus, they're sponsoring gas fees, transaction costs on Arbitrum and Polygon, and giving out free ENS subdomains. The easy-to-read crypto addresses.
That's smart, reducing friction. And that kind of user-friendly innovation, it ties right into the whole stablecoin picture too, doesn't it?
How do you mean?
Well, you see Coinbase and Mercurio cutting USDC on-ramp fees by half for MetaMask users on Base.
Right, making it cheaper to get stablecoins.
Yeah. And Circle, the company behind USDC, they're planning their own Layer 1 blockchain just for USDC.
Interesting.
This is happening while USDC supply grew like 90% year over year, up to over $61 billion. And institutions are getting more interested, partly thanks to things like the Genius Act clarifying some regulations.
Okay, so pulling back a bit, what does all this mean? It sounds like stablecoins, tokenized deposits, CBDCs, they're really fighting each other. They're converging.
Precisely. That's the key takeaway, I think. They each do something different but complementary.
Right.
Stablecoins are great for global payouts. Tokenized deposits, like from JP Morgan, offer regulated U.S. dollar rails for big companies. And wholesale CBDCs could mean 2047 settlement with zero credit risk.
So it's like a unified digital money stack, all running on shared blockchain infrastructure.
Exactly. And that Genius Act is helping unlock regulatory clarity, so you see these huge global banks starting to embrace all three kinds of digital money as just different tools, different rails.
Okay, but it's not all smooth sailing, right? There's that stablecoin interest loophole issue.
Yeah, that's a big debate. U.S. banks are worried. They're telling Congress to tighten up the Genius Act.
Oh, wait, what's the fear?
They're concerned that if stablecoin issuers can pay interest on stablecoins without the same banking regulations, it could pull potentially $6.6 trillion in deposits out of traditional banks. That's a huge potential shift.
Wow. Okay, yeah, that's definitely something to watch. Now, switching gears completely. This sounds almost like science fiction. Autonomous AI agents as Ethereum's next power users.
It does sound futuristic, doesn't it? But yeah, that's the idea.
So there's this thing, Buy402, from Coinbase Developer Platform, an open payments protocol using what, HTTP 402, the payment required code,
That's the one.
to let AI agents just seamlessly pay for things. API calls, storage, content, using on-chain microtransactions.
Exactly. Imagine AI agents that run their own little autonomous businesses or just pay for their own server costs or data access.
It's like proto-digital life forms with pocket money. That's kind of mind-bending.
It is, and connecting that back to the market, Pantera's recent letter suggests this ties into a broader cycle. They think we're moving into phase 2 of the bull market.
Okay, and what happens in phase 2 usually?
Well, historically, that's when altcoins, the cryptocurrencies other than Bitcoin, tend to really outperform Bitcoin. They might account for, 55, 66% of the total market growth in that phase.
Ah, interesting. So the focus shifts.
Potentially. And this could be helped by some regulatory tailwinds for altcoins, too, coming from things like the Genius Act and the Clarity Act, which is aimed at exchanges.
Man, what an incredible tour, huh?
Yeah.
So much happening, from government policy nudging Bitcoin to wallets getting way easier to use, all these digital money types converging, and now AI agents spending crypto. It's just the whole ecosystem is evolving incredibly fast.
It really is accelerating, which brings up an important question for you, the listener, to think about.
Yeah.
How will this rapid convergence finance cutting-edge tech like AI, blockchain, how will it fundamentally change our own personal relationship with digital assets and maybe the whole financial system itself?
That's a big question. Definitely something to ponder as we watch all this unfold. Thanks for tuning in.
Spoken Tech, for your ears.